So you can put it through all, and then when we get into it, if there's any questions, we'll take it in the Q&A. So the first one that I want to share is the CVNA, right? I mean, there are a few of them that I've just picked, and I want to share with you guys that what changes over from the start since Jan till now we have made in terms of trades where we bought time, and how it has actually impacted our performance and how it's actually helped staying longer in the trade. So if you look at CVNA, this was posted in Feb. I just picked this one. It talks about falling wedge breakout pattern, and we took a entry on 46 call for $2.30 or $2.40, and how this chart has performed, and it's hit various target zones. You could see on a weekly we have a cup and handle and also inverse head and shoulder pattern. So this was a big pattern, and looking at this on a daily and weekly is the reason why I actually took this trade. You could see the falling wedge breakout, and then you have a low volume digestion of the previous day breakout, and then again it formed a 2-day consolidation after the breakout. Actually, 1-day consolidation, and this next day again it continued. So this was a trade that actually paid us pretty good. And I'm actually going to share with you I have to see which one it is. Sorry, I'm just trying to see. So, okay, so this CVNA just trying to show you that, how we have performed in this trade. And I apologize, guys. I'm just trying to find the screenshot of all of these different trades. Yeah, this is the one. So the same trade, 46 calls, eventually in next few days has gone up. And I provide the levels for you guys to actually take your profits, right? Now, the most important lesson here is every account is different, every trader is different. It's important that you follow your rules. You have every trade that I post, you have the premiums that we enter and the strike price along with the levels, right? And the charts along with it. So it's your goal is to actually take profits at different target levels. It doesn't have to be exactly at T1 or T2. It can be closer, right? If the levels T2, for example, is 46.4 to 47, if it goes to 46, you can take the profits, right? And keep some and ride higher. That should be your trade plan. This is the trade plan that I provide you based on your risk, based on your account. You can either take all of it at T1 and T2, or you can split it among T1, T2, T3, depending on what your risk profile is. But always keep some runners, and then raise your stop to the break-even point. So that way, after you take your initial profits at T1 and then T2, you raise your stop to break-even, and if that hits, you get out, right? This helps you protecting your trade from turning into a loss, and it helps you to grow your account, right? And you can see that we took profits at T1, T2, they gave us 47%, and then T3, where we hit calls, went to $4.05, and it was 72%, right? And then after that, T4 did hit, but if you don't take your profit and it drops down, you get out at your break-even stop. Okay. So similarly, we had multiple different, CVNA trades. You have these, which is 150 calls. If you look at this trade, we took on June 5th, had over a month expiration out. The reason for this trade was, again, another falling wedge pattern. And you could see here the percentage R was oversold. So when you see indicators, I use percentage R, Williams percentage R's a lot, because they are, to me, they are more reliable, and even though they are laggard, but they are comparatively better in terms of compared to RSI or MACD, because RSI MACD are a lot more laggard than compared to Williams percentage R, right? You see the changes on the price, and it reflects the percentage R right away. on a shorter time frame or longer time frame, right? So we took this trade based on that, and then on weekly at critical support, right? There was a 50% retracement, 98.57, and you saw buyers stepped in with the long tail, and it also hit the 10 moving average, right? If you see throughout this pattern, 10 moving average has held all across, right? Around Jan 2024, when it broke out, it dipped back in mid of Q1, and it went. You see a big, huge candle again when it's away the price is far away from the 10 ma moving average. It comes down, it tests again in April. It broke down and it formed a support zone around this 67.6 what do you say retracement, and then based on earnings, this just flew up, right? From 67 it went to 126. This was earnings gap up run, and then after earnings it consolidated for few weeks and then had a 50% retracement from the lows, which is April 2024, and the highs of I think it's May or June 2024, and then 50% retracement with low volume. So, and then when you see a long tail and you see almost a falling wedge, it's a good indication that you can expect the stock to start going back up in coming weeks. And when you compare that to your daily, you see a falling wedge pattern with percentage as oversold. And once you see 2 day, or you see a inside candle and then 3 day breakout on the what do you say early June, and that's basically an indication that it's a good time to actually start taking a position in. And once you break on a bigger volume, you can add to it. So that was CVNA for 150 contracts. And if you actually look at, let me actually show you how far it went, right? So, sorry. So this is the one, the CVNA 150 calls. We got in at 3.5. It hit $9 something, around 179% gain. And along the way, it's not like I've held this position, all of my position, till it goes to 130 or 136, etc. Right? I mean, I took profits along the way, T1, T2, T3 levels. It's very important you take profits along the way, right? Otherwise, you'll end up losing in the trade, and that's not something we want. Another trade on CVNA, I think, I think this just shows you, the 150 calls, how we benefited, and I kept updating the charts, showing you, what has been going on, where all your on a monthly level, this was multi-month breakout, and this was the 50 moving average on monthly. Every time 50 moving average is critical resistance or support moving average, where most times the price will touch and test it, and it will take few days or few weeks, or for it to take it out. Similarly, on the weekly, you saw this pattern. It broke out, and it kept going up, and you had a multi-day breakout on weekly and daily, right? So this was CVNA for 150, and we also took positions like 175 calls, which was, I think, this. Yeah. We kept rolling up, right? And we took, I mentioned, right, scale into the position, another breakout potential, again, another base formed, another falling wedge. And on a weekly, it had a 50% retracement from the 67 lows in around April. And then after 50% retracement, again, it formed another base, going and testing the earnings, post-earnings highs, which is around 126 something. And that's why we took 175 September calls in July, right? Making sure we give enough time, because the patterns would take time to actually, on a weekly, on a monthly, it will take time to break out. So giving enough time helped us actually stay in the trade. And we already had 150 calls, which we actually, wrote these, which were August expiration. So we had some runners kept, and we added September. Staying in the game, staying in the trade, right? So that's basically what it is. All right. So similarly, IWM. Now this is another one where I looked at this pattern in Feb, and I saw that Russell was laggard compared to S&P and Nasdaq, and this was a huge bullish pattern which was since November of 2023 till Feb, where it has gone nowhere, right? Especially from December of 2023 till Feb, it was sideways movement, sideways to low. And this was the first time in mid of Feb it broke out, and that is where and if you look at, I think on a weekly basis there was a 2 years of sideways movement from August 2022 to Feb. So this was multi-year resistance that was getting tested around 200, right? And this is where on a daily it broke out, but on a weekly it was still testing those. So most times what will happen is we will break out this pattern and then we'll come and back test this. And this is just to show you on a quarterly, we were still within the pattern, we haven't broke out. And once we broke out 200 on a quarterly level, today I think IWM is around 240 range, which is 2021 highs, right? So to me, 2025, IWM small caps, I'm expecting this to break out this quarterly range, which is from 2020 to 2022, 4 quarters, almost a year, or 5 quarters. So once this pattern to 245 breaks out in 2025, we have room to 264, 300, lot higher. So small caps is going to be the one to be focused in 2025, right? So just showing you that. Supermicro, SMCI, we've traded a lot, but this year is to show you that, again, at critical 21 MA, 10 MA, it held all along and it actually bounced up. And why we took this trade, 1,050 calls in February for March expiration. And, immediately within same day, it actually jumped quickly to hit our T1 levels, which is 36%. And then, it continued in the subsequent weeks. So if I actually look at Supermicro trades, I'm just going to share with you guys. Yeah, so I think if you look at this Supermicro trade, we took on Feb 29, T1 hit 36% on the same day, and we continued scaling out of the position, taking profits, obviously not holding all of the position, right? That's huge risk. If you do that, if you have a bigger account size and you want to do that, that's up to you, that's your risk plan. But the best way to always scale out of a position or scale into a position when taking a trade, and keeping runners and riding those. So we hit P7, that's the target 7, and we hit 600%, right? So that's basically how you trade, right? You want to stay in the game, but you want to keep taking profits. So I had T7, we hit that finally, right? We've also taken puts, which is S&P 500, Tesla, these puts. When market was not doing good, I posted this chart telling you guys that, what are the downside levels. We actually hit fib levels 5144, and then we gapped down. This was a reversal candle, and then you got confirmation on a gap down next day. Anytime you get a gap down, especially after a reversal candle from a previous day, 9 out of 10 times the next day when you get a reversal follow through, you will see a huge red day or a green day, right? Just depending. So here we saw that, and you can just buy puts in the first hour and continue riding those till the support zone. And the moment you hit the 10 MA support or 8 MA support, EMA support that I use, you see that most times it actually, you see a long tail, you see buyers step in, right? That's pretty straightforward, basic. So that's with you know SMC, SPX. I think there was also Tesla in this. I don't know. Twitter doesn't let you go back. Okay. Uh, this is the next one. Uh, sorry, my bad. This is the next one. 1,000 calls of July 19. So if I actually go to June 13th, which is when we took the Supermicro trade. Let me show you this. So June 13th, if I take a look at that, that's going to be around this one, right? So June 13th is going to be this one. So the stock went from, I mean, it's $828 to 1,014. So this was a trade that actually didn't give us much. But again, we had a trade, we had a stop. It went to 1,014. And then you could see after that, it just, this was July expiration. It came back to 960, but it just dropped. So we took a stop, took a loss, and we moved on with that, right? Uh, the reason we took a loss was, you see this, we had 4 weeks for expiration. The stock actually tested 21 MA multiple times, and it closed below that, and it closed below 80 MA, which is what I use, right? Or if you're using 10 moving average. And when you close, the price closes on a weekly below two different moving averages. It's normally not a good sign. And the following week, you see the buy stepped in, but it failed to close above 21 moving average on the same week. And the next 2 weeks, you saw a bearish engulfing pattern, and then that basically gives you that you need to get out of the trade, and you had multiple weeks of trade movement. And I think, yeah, go ahead. You had any?
Yeah, we can see your screen. I don't know. I don't see the chart.
Oh, you're not seeing the screen?
Yeah.
Let's see. Let's actually do the entire screen. Let me know if you can see now. Can you see now?
Yeah, it was just the SMCI chart you were showing earlier. Couldn't see it. Yeah, now we can see it. Thank you.
Yeah. So what I'm sharing here is this section, right? Around June 13th is when we took this trade. And this is what I'm talking about, right? This is where the stock moved up. The first attempt of breaking, they had multiple attempts of breaking 21 MA, and it broke up. And then when it was doing the back test, it failed to actually close in the second attempt. And then we had a news, I think around July. I think this was when we had the news on, I think the 10K filing or something. And the stock was looking good. After multiple days of downside, it was made an uptrend and closed above it. But on the following week, when we got the 10K news, this was complete sell-off, right? So this was the 10K news that happened during that time. So, all right. So moving on to the next one, right? PayPal. This I shared during April, showing you guys that what I'm looking at on a quarterly. So I use this is where I've gotten the change of making sure that we buy more time in swing trading a lot of these names which were not moving at all for years. Like if you see PayPal since 2022 to 2024, it hasn't moved. It has been just on a downtrend. But around 2023, for 3 different quarters, it was moving on sideways. So this was basically, and you could see that there was buyers stepping in. So there was volume coming in. So this gave you two things, right? One, sellers have dried out, buyers have stepped in. So you had sideways movement for 4 quarters almost. And it also formed a falling wedge, right? So this is when I looked into, getting into PayPal. So when I look at monthly, you could see a clear falling wedge pattern, and you could see that, for 3, 4 months in a row, it has been sideways, indecision candles, and there were more buyers. There were more green volume, more buyers than sellers. So this was confirming that, we are actually finally going to see a turnaround. And this is when I actually, around I waited until the breakout happens, and then we got a couple of months. I think, was it a couple of months? Yeah, a couple of months from there, we took a position. Right. This is when I saw on a quarterly, what do you say? Finally, you could see the breakout, right, from this falling wedge, and the percentage R. You could see that it actually turned upside. So on a monthly, it broke out and it formed another, what do you say, sideways movement pattern for it to take it out. What made me buy a position in was looking at the open interest. There was huge volume of 62.5 June 2026, around 14,000 buy, and 65 call as well that they were buying for last few weeks. When I started seeing this and combined it with the chart pattern, uh, I took a position in the June of 2026, letting it take its own sweet time for this pattern to actually start paying us, right? So this and around, I think during that time, PayPal earning was also showing some positive sign. There were new CEO, and the new CEO was talking about the changes they're going to make and how they're going to focus on businesses, on their business units that was actually generating revenue, and shutting down business units that was not generating revenue. So all this combined with the chart pattern and the open interest and the volume buying in was the indicator for me to actually, start buying position into this. So today, if you look at it, PayPal June 2026, right? So when we took this position, PayPal was $65. Today, PayPal is, I think, 88, 90. Yeah, 86.77, and it hit 88.74. Now, what I want to show you here is if you look at PayPal today, actually, let's go to a better, let me actually take a trend spider. So if I look at PayPal today, there's been continuous buying volume for 5 months in a row, and it's been followed by the price. So you could see we broke out of the falling wedge, and volume has been confirming it, right? And this was the VWAP. And here on the quarterly, it's even better, right? The quarterly percentage R, if you note here, it's actually turning upside, right? The moment it starts getting into this gray zone, PayPal price will be a lot higher. I'm expecting 128. I think this is 221 MA. Yeah. So I'm expecting PayPal to go in 2025, at least 120, this zone, right? 124, 120, 124, right? This is going to be the zone where PayPal will go, right? Around this spot, this candle, 122, right? And then we'll have another base for a few months. It will start forming up another, base or something pattern, and then take that out towards the end of 2025. We should see close to 170, right? So our June 2026, of course, you should take some profits because I think we are already in deep in the money by $21. And I think PayPal June 2026, if I have to take a look at the options, Let me see. Let's see where are the options. So if I look at June 2026, $65 calls. These are worth $32, right? And what price did we get in? We got them at $17. So we almost double. Okay. And I do expect, imagine this is going to 120 by mid next year max, right? So these will be worth at least $60. Uh, that's the minimum. It'll be deep in the money by $60. Now, the change buying time, here's the advantage you have now, right? If you had, say, 20 contracts or 50 contracts of this, you can now buy straight away the shares because now you know the stock is deep in the money, say $120 by next year, mid next year. You know you're deep in the money by $60. Uh, you can convert those options into shares, exercise them, and you can own the stock and ride them along, right? You don't have to worry about anything, and you can buy puts for any downside movement to save your profits. And this is one change I've made this year, throughout the year, is buying more time because you can actually swing trade much easier now as compared to a few years ago. And it also gives you the option of buying stock, right? You can own the shares at 65 plus 17. What is that? $82 or something, right? And the stock would be at 165. And with June expiration, you can expect this by June 2026. PayPal can just hit uh, the June expiration. PayPal can see $170, right? June 2026, right? And if it does good, if the earnings are good, you can also see, you can end up seeing 61.8 retracement or even 78.6, $250 by June 2026. Okay. Now, again, I'm not telling you that it's going to happen exactly, but your goal as a trader or as an investor should be to minimize your risk, capture your profits, take your profits. All right. The next one is Tesla. I showed this in June 16, showing you how the stock is actually having a turnaround. It held a VWAP on a quarterly, which is a bigger time frame, and it is almost holding a 21 MA, right? And showing you that this stock hasn't performed at all in 2024. So by June, the stock was down 30%, right? And our job is to actually find these patterns, find these stocks that are actually not doing good, but they are at a critical support where they'll have a turnaround someday, right? And this is why I mentioned close above 199 200 in Q2, which is June quarter, sets for Q3 Q4, right? 251. And where are we in Q4? If you look at Tesla, I talked about 215, 251 by Q3, Q4. Tesla is actually at 345. So we are $100 in the, above my mentioned price, right? This was my low point that I mentioned, right? A low level that I was talking about, 251 is what I was expecting the least. And Tesla has actually performed much, much better, right? So we recognize this pattern. Then we took a position in June, 300 calls for Jan 2026, which is 1.5 years from June 2024, right? And what was the price of Tesla at June 2024? If you look at that, June, it was around 200 to 250, between 200 to $250. So on June 17, if you take a look at June 17, Tesla was what do you say? Yeah. So Tesla was around June 17, Tesla was 250, 260 range. right? We took 300 calls Jan 2026 for $2021. And right now, Tesla is, of course, deep in the money, but I'm assuming it went 97 or something. What did we take? Jan 2026, 300 calls, right? So if you look at Jan 2026, 300 calls are 108, right? It's already 4x or 5x. We are already up 400%. Now, same concept, right? Buy time, you take some profits, you can keep rest of it. You can now convert these into exercise this into shares, and you can have the stock at $320. Where next 4 years, I do expect Tesla to do a lot better. I'm expecting Tesla. I have what 507. That is my about the all-time highs is 413.60, 507. So I'm expecting Tesla to be north of 500 in next year. That's my low level target. That's not even my upside high level target, right? So I'm just giving the most low level target here. So 608 is where I expect breakup of this pattern. Yeah, I mean, and then we roll up. We actually bought in November 600 calls for Jan 2026, and these are also already up. If I'm not mistaken, we are holding. At least I'm holding 300 calls. Some at least 50% of them, and then we have the Jan 600 calls. If you look at that, look at Jan 600 calls. So these are $31, right? And this is 26. So we are up, what do you say, 20%, right? We're already up 20%. I mean, these are already gone up a lot higher, but I'm just telling you, as of today, they are up 20%. I know it hit T1. So RDTT, another one, we did a run up into earnings play. July 2nd, we bought August expiration. And RDTT, the pattern was on a weekly, it was a breakout of this. And that's when we took an entry. So for 100 calls at $70. Plus, I saw heavy volume, right? What do you say? Actually, this is someone, yeah. So you can, I saw volume coming in RDTT. I haven't mentioned it here, but, and that's where we bought this, run up into the earnings. I think this did a lot better. RDTT, they went up a lot higher. Let me see if I have that. I apologize. I think next time I'll. Yeah. So I think RDTT August, July 2nd, 100 calls. If you take a look at this, can't actually. It won't let me see the old ones. So at $70, July 2nd, if I take a look at this, I think this was the spot. No. Here it is, right? So July 2nd, if you take a look at this, the stock was at $74 high. And look at the stock, it's gone to 159. And we had August expiration. So if you take July 2nd to August 16th, I think the stock actually dipped, but $70 went to 78. So I think this one we took a loss. It went down, and I think around August it was at around the expiration it was at 57 or something. So I'm showing you both. Where we've not all trades work. So you're seeing trades that have not worked. RDTT, MARA, those have not worked. Avago, this has worked. We took this trade based on monthly long tail big buyer stepped in at the critical moving average, and then you saw on a weekly bull pattern, right? And around August, we bought the Jan expiration for 200 calls, right? So similar process, buy more time, ride this, and take profits along the way, right? In recent times, if you take a look at it, we bought uh, Kawa, we did Affirm. So Kawa, we bought it in September, expiration 120 calls for September 5th. And the reason we took this trade was multi-day breakout. So this is and Kawa then ended up making 150 or something. So on September 5th, 120 calls. If you take a look at it, right, September 5th, Kawa at 110, it went to 132, right? 120 calls were in the money by 11, $12. So that was Kawa. Uh, Affirm, we bought Jan expiration, if I remember. Yeah, 45 calls around September 11. Same thing, falling wedge. Sellers dried up after the earnings gap up. And then, on a weekly, you saw reversal candle, reversal doji. And the following week, stock went up. So if you look at September 11, 45, September 11, Affirm, if you look at that, you had September 11 here, right? At $44. And then we have the expiration, which is September, Jan end. And right now, today's stock is at $70, right? So our 45 calls are deep in the money, right? These are, what do you say, 70 minus 45, deep, $25. So they are already up 525%, right? So then you saw the Bitcoin, right? Bitcoin started doing good. And with Bitcoin had MSTR, which was actually doing much better. So if you look at MicroStrategy, we took those in October. And the reason we took this was because of this bullish pattern. You had a breakout long candle and then inside a week. So this was setting up, and also BTC was doing good. It was also setting up for a big breakout, and it held the critical support here on a fib level, and 50% retracement also happened, right? So we took this October 18, 150 calls on September 17. So if you look at MSTR, we took on September 17, October 18th expiration. I can't see the old ones. So if I just do the chart, around September 17, we took October 18th, right? So this was where MSTR was around 140 or below that, right? If you see September 28th. And if you look at October, MSTR already hit $227. So this was another trade that actually, and similar to PayPal, similar to Tesla, Square is the one recently we bought time. We bought September 2025. These are 105 calls. When we took on November 11th, stock was at $82, right? The monthly it was going to break out, quarterly, similar thing, right? 2022 to 2024. For almost 2 years, it hasn't moved, right? So my expectation is Square is going to head to this big quarterly candle, right? So these 105 calls will be in the money. I do expect that. So if you look at current pattern for Square, it's now, if you look at this, it's finally breaking out, and it's closed in November above this. So this is really important pattern, right? Finally, we have broken out of 2 years of resistance, sideways movement, and closed above it. This closing above is very important. Now, in December, as long as the stock stays above 82, or even 85 close, this is heading to the first section 108, which is 106, 108. And then above that, it's heading to this 120 zone, 120, 130 zone, right? So I expect Square to go a lot higher in 2025. Looking at quarterly, similar thing. It's closed this quarter, December. As long as it closes above 85, $87, 85, $88, this is heading to this 108, 111, and then above this, it's heading to this 136 zone. So by September next year, Square can see 136, which will give our 105 calls deep in the money. So that's why I like Square. All right, so I think the bottom line, what I'm trying to help you guys understand is buy time and ride the trend. This will help you not get panic with the near-term positions or near-term expiration. And when you're doing weekly, monthly, any of these, make sure you actually size small. As long as you do weekly, monthly, close by expiration, size small, right? Anything further out, you buy a larger size. And that's where you make big money, right? Because you can ride the trend and you can use weekly, monthly, quarterly closing price on a monthly and quarterly as your stop. That's pretty important. Don't, if you're buying, like we bought Tesla, we bought Square, which is Jan 2026 expiration, don't use monthly, don't use weekly or daily closing price as your stop. That's a big mistake, right? The least you could do is monthly, or you can use quarterly closing price as your stop. This will help you stay focused and stay on the trade and ride along. Okay. All right. So I think let's actually look at the next section, right? What I want to talk about the next is the outlook for December and 2025, right? I'll do another webinar in the future to before the year end, so that we can see take a look at 2025, what to expect in 2025. So for now, look at the index, right? The futures should be up. Let's look at the futures first.
Can I ask for a favor?
Oh, sorry, could you repeat that?
Can I ask for a favor? Can you post your opening trades, all the opening trades on as one post?
That's going to see. Okay, I can do that, but the reason I don't want to do that is I don't want people to actually take trades that are already we have taken profits out of it, right? What will happen is people will start taking those Jan expiration 2026 or March or even a month out trades that we are already taken locked our profits, and then you're paying higher premium and you'll end up taking a loss.
No, so, just what were the opening trades you have it, and what was the premium, right? Consolidated in one post. So in case it comes back to the same price, right?
No, that's what I'm saying. So even if it comes back to the same price, I wouldn't take it, right? Because we've already taken profits out of those trades, and we are riding a smaller size position, right? And we have a break-even stop. Just because the premium comes back to that same price, and you're going to end up taking it at that particular moment, the chart pattern might be different. There might be a different news, right? And I don't want people to get into taking those trades. So it's better you wait for any new trades and then you take that, because every time the price changes and we've already taken our profits, and then you enter and then you'll end up taking a loss, and it won't be the right thing to do for your account. Okay.
All right, thanks.
All right. Okay, so we'll go to the questions after this, but let me actually, and I'll take a few charts. Let me see if you guys want me to, do you guys want me to extend the time by another 30 minutes if you guys are interested? Give me a yes, no. Guys. Okay. Okay, fine. I'll extend this by another 20, 30 minutes. All right. So, okay, let's see. All right. So, okay, what's happening in the futures, right? So let's keep it simple. If you look at the daily candle here, futures, it's an inside candle, right? And if you look at the weekly, we are obviously at all-time highs. What I don't like is, we extended. It's overbought. So if you look at percentage R, it's already an overbought. And overbought doesn't mean that, index or a stock cannot stay in overbought for a longer period of time. It's just that I would be little cautious when I'm trying to take any positions when stocks or indices are at overbought levels. I would size small. That's my basic rule of thumb, right? But now when I look at this, I do expect, we are now testing the November 11th highs in the futures, right? As in S&P 500 or ES, right? So I do expect this to go to 6170, 6150, right? I am expecting 6150, 6200 by end of December, basically end of this year, right? But it's not going to be straight up. It's going to be, you'll have this consolidation on daily, dip back to 6,000 and then take it out, and then new all-time highs and then consolidate, take it out. That's how it's going to be. Why? Because we are already at overbought conditions. So normally price would reset once they're at overbought levels. They would reset, the percentage R would come down, and then you'd see the price expand, right? So that's what I'm expecting. So 6150, 6200 is the range that I'm looking at. Uh, S&P 500. Yes, right. So here you see overbought. So I do expect 6100, 6150. And on weekly as well, we are overbought, right? So something to keep an eye on. Small caps, it's setting up on a daily, and on weekly, it tested the 2022 all-time highs, 244. So I do expect small caps to perform in 2025, right? So this is something I'm watching in 2025. If you look at Russell, is basically the small caps, and if you look at this, you see 2550, right? 2550 looks doable, but this is on a daily time frame, right? But if you look at the monthly, we still haven't broken out, and that's the reason why I'm saying that small cap will perform good in 2025, because it has done for last, I think it's 2-3 years, since 2022 November, 2021 November. It's almost 3 years. It's actually 3 years, right? 2021 November. So this breakout in 2025 is going to be huge. We're going to see 3,000, right? So likelihood you'll see small caps outperform in 2025. So stocks like, fintech stocks like Square, PayPal, AFRM, Upstart, a lot of these small caps companies will do good. So small caps most likely should outperform in 2025. That's my expectation, right? We have broken out. If you look at monthly, look at this. This is you can take a look at this as cup, right? Cup and handle, right? So, and it has been consolidating the handle portion for 4 months, 3-4 months, and then it took it out. Now I'm expecting another month or so, some basing here, and then take it out, and then head towards this 2979. Looking at Nasdaq has been doing good. We again on a monthly, we made all-time highs in July, and since then all it has done is consolidated, and then finally we took out this 20690, right? So where is this heading? This on monthly, if you take a look at this, and this is the right. So we've hit the 161.8 level, right? The next level is actual next level is this 27144, right? Based on this FIB pattern. On a shorter term pattern, 22,900, 23,000, right? So that's where I'm expecting Nasdaq to go. If I look at, same thing with QQQ, right? So QQQ based on this 2021 to lows of 2023 October, it's heading to 660, and you know, short term 528, 550. If I look at semiconductor sector, you've hit the 283, 261. So next one is 408, right? But that's not going to happen straight. It's going to take a while. On a monthly, 330 is the next level, right? So, but semi is going to continue to perform, but it's not going to be as good as uh, small sector, right? The small caps sector, right? So I do expect semi to continue to do what it's doing because the demand is there, and Nvidia is the key one that will continue to outperform in 2025, 2026. But in terms of risk versus reward, in terms of, like this year, Nvidia or Supermicro, for example, has gone from, I think, $200 to $1,200, 600%, right? Nvidia has gone from what, 500, 600? What was it at the start of this year? If you look at Nvidia, it was $47 and it's 150, right? So it's 3x. So I do expect them to go up, but it'll go up 50% from here, right? Say 138 will be $200, right? It won't be 138, won't happen $300 or $400 in next 1 year. So semiconductor will take a back seat. It'll continue to outperform. It'll continue to do good, but it's the risk reward in small caps is much better, right? So that's what I'm. So in December, if you look at it, if you look at the monthly, all it's done is it's held this 8 EMA monthly and it's been sideways, right? So October, November sideways. So watch December, we should see around 260 in SMH. And I'm expecting another potentially a sideways movement. So right now we are 242, another 20 points up. Potentially we can see that. And pretty much it won't. I don't expect this to break out 262. If this breaks out 262, then you can expect Nvidia to go crazy, right? You need Nvidia to outperform. So Nvidia again is 144, 152, right? So I do expect in December Nvidia to go to 144, around 150 and stall there. Supermicro, yeah, I mean, the day they file the 10K and it gets approved, I expect the stock to go back to 60, 70. So 2025, I expect Supermicro to go 70. But anyway, so okay. So the outlook for SPX, as I mentioned, 6150, 6200. NASDAQ 23,000, right? I expect this to continue. Russell, I expect this to, break out. So we can see 2600 if it wants, or we can just stall here and then take out in Jan, right? So that's for these. Energy sector. Energy sector is another one that's going to outperform in 2025. So let's look at your chart here. So if you look at, yeah, it's not done. There's not been any movement for a long time, right? So if you take a look at this, it's been 2021 to 2024. It's been only sideways. And with the AI, you need a lot of power. So I'm expecting this to be tested some point of time next year, which is 100 and 150, right? And once this gets taken out, then you can expect this to go up a lot higher. So 109 and 125 are the upside levels. So once 102 gets taken out. All right, so that's the outlook. I expect next 2 weeks or 3 weeks market to go up. It's going to be short weeks in Christmas week and New Year week. So December normally you would see price action will be pretty good, but because it's holiday season, there'll be low volume month. But you'll have price grind higher, even if it is overbought conditions. Okay, so that's the expectation and that's the market outlook for December for the rest of the remaining 2024. All right, so let's take some questions. We can take some charts and questions. Let's see. If you want to.
So can I ask, is that something we can go get back on to the Discord channel?
Okay, so the Discord channel was the reason I shut that down is because I think there was not much participation after a point of time. And if everyone wants to use the Discord chat room, I can activate that again. But I'll put a poll out. If everyone is interested, then I'll actually start the Discord channel again, right? I may at least need, if people are going to participate and it's going to help, because Discord channel will help people, but only if you participate, right? And I've been posting charts and everything in Discord channel in past. So the moment people
So
stop
that was pretty
using
helpful a couple of years back, right? Yeah. True.
Okay. So I'll put a poll. If everyone wants to use it, then I'll post it on. I'll start the Discord channel again. Okay.
And then one more question I have is, so is there a reason you don't give trades on selling the puts?
There's no reason because I think selling puts trades or anything. It's just that I think a lot of people are not well versed with selling puts and they'll have a lot of questions, right? They're trading pretty basic, and that's the reason I don't put a lot of these credit spreads or credit. Yeah, I mean I can start doing that. I can start putting if people are interested, but what will happen is many of them don't know how to execute these trades, and then if you don't know how to actually open these trades, then while closing also you'll have a lot of questions and you'll be in trouble if you don't close it on time. And if you have small accounts and anything, you'll obviously with these selling credit spreads and everything, you're going to use your margin. And if you don't close it on time, you're going to end up, screwing your account. And that's the reason I keep it very simple, right? You buy long calls, call spreads, butterflies. We do all of that instead of doing this.
Right.
Okay.
I'd like to see some of the sell put coming in just as in like it's helpful sometimes.
Sure. I mean, I can start doing that.
Right,
2025, let me start doing that because I think we don't have to do too many of them. We can do one or two here and there, and then see how everyone is actually coping with that. And once if everyone is actually getting comfortable with that, then I'll put more of those. Because especially when in a bullish or bearish trend, it's easier to do sell calls or put spreads, and you can actually capture more of these premiums. Okay.
Thank you.
All right. Any questions from anyone else? You can unmute yourself, or you can drop a message in the chat, and I can actually, or if you want me to look at any charts.
Yeah. Hi, this is Prakash. What's the best way to, scale in into long-term calls or stock? Because once it's executed and all that, and I don't want to go in full position.
Okay, so let me get your question right. So you want to know how we can scale in, right? For long-term positions.
Yes.
Okay.
Calls or stock, yeah.
So,
like for example, like PayPal or Square, and some of those, or even Tesla, for example.
So normally, okay. So what I normally do is I would scale in like. It depends on the pattern, right? So I would scale in at if the monthly breakout is happening, then I would scale in like at least 50% of it, right? On a shorter time frame, like weekly, if I'm buying Jan 2026, right? I would start scaling in, looking at this Tesla pattern that I posted, right? Let's take the Tesla trade. let me just take the Tesla trade. So this way I can explain you better. So if you look at this, this is the pattern I showed. I did not scale into this position. Why? Because I see a doji candle. I still need this confirmation candle following quarter or following month, right? But okay, yeah, you look at this. On June 17, I just took a 30% of the position, 1/3, right? Because I saw promising that there's long tail, it's an indecision even though, but it held the VWAP critical support. So I took a 30% position. The moment I saw this actually broke out on on a what's this? Sorry, I'm just trying to. Okay, so the moment I saw the close above this 21 moving average or even 8 EMA moving average on a monthly or on a quarterly, so this is June 17th. So if you look at June 17th monthly, right, you saw a huge green candle, right, from 199 to 276. And this time the stock was priced at 178. So that's when you see a confirmation, right? A previous month, this was the candle when we took the entry. And you see the following month, you see a follow through, which is a breakout of 5 months, 1, 2, 3, 4, 5, 6 months. That is where I would go like, what say, full position, because this is a 6 months breakout, 2 quarter breakout, and you see huge volume coming in, right, which is larger volume. So I started taking full position, and then after this it dipped. So you scale out, and then wait, this is 2023, not this one. That's what I was thinking. Yeah, this is the one. So this is 5 months breakout. This is where I started taking. So here, when it is closer to this, attempting to break out, I took 30% position, and the moment the price got above 21 MA, which is the moving average, which is finally turned up because of the price gone up. But here you see the price have closed above 21 moving average on a bigger time frame, which is monthly, and this is where you take a 100% position or 90% position. So here you take 30%, and the remaining position you can add here. And then the following month, you see on a back test, if it holds the 21 moving average and this breakout zone, which is 205, right? 205, then you add the remaining position. So you can you add here 30%, breakout close above, you add another 50%. So, and the remaining 30% you can add on the back test when it holds. And then you see the following months it just continued up, right? So and with the advantage of buying Jan or 1 year out, you can use monthly critical moving averages as your zone to actually add to it. Even if it is you're buying above normal size, that's fine, because as long as it holds critical levels, you can add another 50%. So instead of you having, say, if you go for a 20,000 or say if you're going for 50 contracts here, right, and the following month it actually back tested, you take the position only when it closes above the previous month moving average or the previous month opening price or closing price. And that's where you can add another 30-50 contracts, right? So even though your size is normally 50 contracts, you take 30 contract 20 15 contracts, and then you add here in this candle the remaining. So now your full size, when the back test it holds, you can always because you're going to scale out here. So 15 contracts and 35 contracts you added, 55 contracts. The moment the price goes here 270, you're obviously going to scale out because your target zones are 215, 250, 252. So you've already hit 250, 252. You scale out and you hold 15, 20 contracts. And then in the following month, if it back tests, you can get out, or you can actually hold until the closing price of the monthly. Your closing price on the monthly time frame is pretty critical. It closes above this, you can start adding back position. In the following month, it went back up, you can add another, go back to your full size, right? And then if it closes above multi-month, then you can either start scaling out or you can start adding more because you have enough time, right? And then you can take advantage of it. So this is normally how I actually take advantage of scaling in and scaling out.
Great, thank you.
Okay.
And so when we look at PayPal, for example, I mean, you were showing 87,855 or something of that sort is a add point, right? If you think about it.
Okay, so PayPal. Okay, so let's take PayPal. When did we add PayPal? PayPal. So if you take a look at PayPal, the trade was posted on June 6th. Okay, stock price was at $65. Why did I take the PayPal position? It broke out of this pattern, right? And then it closed below it on a quarterly. Quarterly is way more powerful. Okay, but if you look at the monthly, it broke out. So when it broke out, you take say 30% of the position, and then you wait. This was doji. This was doji. So it broke. If it breaks out of this doji, here you take 30% of the position. But you see, there's 21 MA on monthly. That normally would be a resistance. Any kind of moving average is going to be resistant. So it has to wait for this 10 MA to actually curl up, right? So I took only 30% of the position here. When it tested this, even and I saw a huge volume buying for June 2026. So I did not sell. As long as it held this 10 MA, I kept holding this position because of this June 2026, which is almost 2 years. It's actually 2 years, not almost, because we took around June. So I waited for this price to actually, consolidate and let the price keep pushing and testing this moving average so that finally 10 MA, which you're seeing little up, it's going to curl up, right? The moment it broke this, I went all in. I mean, not all in, as in like 100% position about this because it closed above, in the subsequent month, it closed about 21 moving average. So if you look at this, sorry, where is that? If you look at this, okay, PayPal June 2021. Let's see when did PayPal close on monthly. So monthly June 6th. If you look at this, June 1st, yeah, June, yeah. If you look at this June, it was in July, August is when it closed above, right? It closed above these multi-month $63, $68, and that is when I added full position, right? Because now it's closing above 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 3, 6, 7, 8, 9, 10, 11, 11 months. It's closing about almost a year above that, which is 70.66, and it closed at 72.43. So I was in full position here because now I know that, the 21 moving average, which was dipping lower, it's actually turned flat here, and now it's curling up. And you see this 8 EMA, which was actually flat and it was already curling up, it actually crossed 21. So this is a strong confluence here. One particular moving average crossing another one, it's a strong confluence, it's a strong support. 9 out of 10 times it won't break that unless there is a news, right? And it gaps down. And now I expect what happens, the price action, what will happen. I went full position here. You can still add here. If it dips, we have taken profits at 88, 85, we have taken profits. If it dips, you can add back the position. If it dips to 74, which is your 72.43, which is your August close, which is about 11 months, you can add this again as long as it closes above 73 for that particular month. And with this price going up, moving average curling up, 21 moving average is eventually going to it's going to turn up a lot higher. When that happens, the price is not going to price will go up and it will go back test 21 again and again. So you're going to get higher highs, and these higher highs is what is going to help you scale out. And when it dips, you scale in again. scale out, scale in, scale out, scale in. That's how you're going to. So you will continue to hold this trend and stay in this stock until your, what is it, June 2026. Because you don't want to get out of this position sooner. We have 1.5 years. There's no reason for you to. All you can do is scale out and scale in and keep holding this position. Okay?
Got it. Thank you.
Okay, I hope that helps. All right. I have 10 more minutes. Any other questions before we call it a?
I have a question on SMCI. Remember when we got out because it dropped because of the 10K mess? So we got out. Would you do a put then? It was clearly dropping. Like you said, it looked didn't look good. It was going to keep going down. Would we turn around and buy a put?
Yes. So the SMCI, I did post one of the puts, but when you get a 10K news, it's a pretty bad thing, right, for any company.
Mm-hmm.
And in 2018, I remember SMCI in 2018 around June, they had similar thing. Yeah, so I think around, yeah, this is the section, right? So if you see, SMCI had similar 10K issued around this time, and all it did from $25, $26, it went to $9, $8.50. So if you go back and you take a look at the news, this is 2018 June, and I think around February of 2019, SMCI turned back up because this is when they filed the 10K. If my memory serves right, it was June. If my memory serves right, it was around June something. 10K delay 2018. Yeah, back in 2018, it was removed from Nasdaq, right? This happened in 2018, right? So, and in Feb, look at this. In Feb, SMCI actually filed the 10K, right?
I forgot they got listed.
Yeah, so basically my point is like when you have 10K news for any company, you can buy puts few months out and you don't have to worry about it, right? Because 9 out of 10 times the stock will go down. So in 2024, we got this, you could just buy the put here and slide it down lower, right?
Mm-hmm.
So it's a no-brainer, right? When you get news like these, it's a no-brainer. And I saw a lot of put volumes stepping in. In fact, I actually bought Feb. I saw even Feb puts and everything that they kept buying. They kept buying puts. And during this, it was pre-split. So pre-split, it was $960. And from $960, it went down to, today it went down to $170. So yeah. And the other thing that you can look at is you have indecision for 2 months, and then the following one with the 10K news, it broke down 1, 2, 3, 4 months lows, right? And it was below previous month in July, and with the 10K put, when the moment it closes below 1, 2, 3, 4, 5 months, which is 65, 63, it's you can straight away buy puts and you can write this down to 21 MA. And 21 MA, immediately you'll see a bounce. So 21 MA, 50 MA are pretty critical moving average. Most times the price will test it, it'll either bounce or it'll break out. It'll stall there before it breaks up. So, and these patterns you can keep noticing, and when you keep looking at different stocks, keep noticing it around, if they break multi-month, multi-week price and close below it, most times below 10 or 8, it will head towards 21 moving average. And most times about 10 or 8 MA, it'll head towards 21 moving average. Something like that. Okay?
Mm-hmm.
Hey, what about NVIDIA? Actually, I missed the meeting, so I don't know whether you told about the
I've not
NVIDIA.
gone through any charts. So NVIDIA, I did talk about it. I do expect NVIDIA, it's going to continue to be sideways. So if you let me share something, right? Notice this, right?
Okay.
The price, it made all-time highs and then sideways for 3 months, 4 months. And then again, it made all-time highs. It dipped here and then it dipped here and then it moved up. And again, we are seeing a similar pattern. So I do expect NVIDIA to continue to, grind slowly. And if you see the pattern, it's a divergence. To me, this is a, look at this. This is a divergence, right? Percentage
Right.
is going down, the price is going up. And if you look at the volume, it's going down a little bit, right? So there are better stocks. What I see is Nvidia will continue to stall. I think the next big move will come when the percentage are we actually see going a lot lower, and this 8 EMA and 21 EMA, 21 moving average catches up to the price. So I do expect 144, 152 to be tested again, and then probably when President Trump takes a post on Jan 20, I think the
Okay.
market will correct around or later than during the time, and that will be pretty good spot for Nvidia price to also the moving average to catch up to it and see some bearish sentiment across the board, which will give you a better risk reward. But right now, sideways grind to slowly up because December is normally bullish. So 144, 152, 155 would be the upside. And then, we see some price catch up to the moving average catch up to the price and then take that out to go towards 160, 185. Okay.
Okay.
So
Okay.
the best way to trade NVIDIA, I would sell puts, 90 puts, because that was the low post split August. Sell 90 puts. You can sell 3 months, 6 months out, even 100 puts. You'll do good. Do a credit spread, put credit spread. And if you are going to do long side, you either buy stock or you can buy, 2026 Jan or 2027 Jan expirations. You can scale in, buy 30% and, take some profits when it goes up. Then when it dips to critical spot, keep adding it, right? And you can ride the wave. And I wouldn't buy 185, 200 out of the money. It's rather buy 160 or 150 out of the money, right? 150 or 160. 150 is better, right? They're not going to be that expensive, but it'll keep you in the game and you won't, the premiums won't go down much when the stock goes down, unless it goes down significantly. Okay.
Okay. And how the market will be this week? It's a bullish or bearish?
So December is normally bullish for markets, so I do expect market to go up, but I would avoid trading weekly, bi-weekly, heavy position size. I'd rather keep it as a 1/3 of your normal size in terms of position size, or treat it as a lotto size and trade them, right? Because after mid-December, market is just going to be, the traders are going to be on vacation more, right? Christmas and New Year, so don't expect
Right.
much, but slow grind up. Pretty much what happened on Friday, Thanksgiving Day, where market slowly just grinded up and on a low volume. So not much, right? So that's pretty much.
Hey, can you provide some information about your stocks membership as well? Like, I just want to know how often you send out the trades and how long the trades would be.
So okay, so actually that's a good question. So in the stock membership, right, we do swing trades. So if you look at all the recent, it's based on the pattern, right? I won't be doing every week. You'll have few trades, and we will be managing our existing trades, right? So, for example, if you see RKLB, October 14, we took an entry, and then you keep getting an update on those. If you see last week, I took a race was a position that we took, right? Snow was an older position we took in November 14th, which is I think 2 weeks ago, and at around 127, 131 range, and it has done good. It already getting to target 3 position, and we ride this higher. MSTR was last week. We took MSTR MicroStrategy, We did do MicroStrategy before as well. I'll show you at $150, $250, and then we rode it to 540, 530, and then we got out of that position when it reversed. I think, where is that? LMND was November 18. So every week you'll have, what is it? November 18. If you do, yeah. So few trades here, there are few trades here. So you'll have like, I won't be posting trades just for the sake of it, but based on the patterns and like this one, MSTR. This one is November 6th, $250. We took the trade, right? So yeah. So I think key is we take positions, we write them, because unless all the targets hit, or most of the or all of the targets hit or stop hits, we'll be staying in the trade and we continue to. So this is a swing. The stock subscription is more of a swing trades. I don't do day trades. I don't do what do you say, buy today and then just sell it, something like that. If the targets hit on the same day, yeah, of course, we'll take the profits and move on, right? So you'll have like anywhere between 3 to 10 trades a week, or right, but not beyond that, right? Most likely 3, 4 trades a week, and then we manage those, right? So like Twilio, MSTR, these were last week. We took 3 trades, 4 trades last week, right? And it was a short week, so we took only 2 or 3 trades. Before that, it'll be a lot longer. So I took long Twilio. What is Twilio doing? Yeah, 104 something, right? So it has the reason we took this trade, I think daily it came to 80 EMA, falling wedge, right? I'm expecting this to break out, but last week was short week, inside day. So I'm expecting anything above 106, this gets going, right? And we have 114, 136. So that's how I trade with stocks. You don't have to watch it every day, every second. You buy your trade, put your orders, set your stop, you're good to go. Okay?
Yeah, that's helpful. Thank you.
Okay.
And what about Tesla this week? One last question, sorry.
Sure. Tesla is, I think there was good news. Let's see, what is Robinhood telling us? So, Tesla is, it held this, I use this, it held this support here. Basically, this is your support. So Tesla looks good. I expect Tesla to go back up to 349, 350. It will, and if it breaks this out, we see 362. And about 360, this was sell off on a heavy volume. If you look at it, 96 million, 89 million, right? So it will stall here. I expect 361 to come, but it'll stall here. Now, the good thing is, actually, it's not engulfing pattern, but yeah, so it will stall here. Most likely, we are seeing 360, 362. Once 362 breaks up, it's heading to 450. I have 374, 372, 384, 384, and 400, and then 450, right? So I expect Tesla to go up. This is daily. Look at weekly. Sideways. All it did is sideways. And this is what I'm trying to teach you guys, right? So look at this percentage R, William, right? It's overbought. The moment percentage R is always in the overbought, you will see back and forth in the price. Most likely it'll be a sideways movement because it's waiting for this to reset. Once this resets, it comes down and comes closer to here, it'll bounce up. Then you'll see the price will go up. So I expect Tesla bounce up and then profit taking happening. And then, we consolidate again, right? So it has to take out 362 and this has to reset. So until that happens, I expect Tesla to go sideways, right? 345 will become 360 and then again sideways, right? So that's what I expect.
Okay. Thank you.
Any other questions, guys? Anyone else? Okay.
Quick question. So in the morning, you will be posting some levels, right? How can we use them?
Okay, so every morning, right, I do post levels, right? So the levels are for you to actually, this is how I'll post, right? So now the levels are basically for you. These are basically upside levels, which tells you these are the next resistant levels, or the levels, or the point where about this 1626 breaks out, you get to this level, right? So if you are doing intraday trades or trading it, you can use these levels, right? If it breaks out 6026, then you know it's heading to 6050, so you can buy calls 1 point away from 26. So 6027, you can take an entry into SPX calls. At the same day you do in the money, or if you do a week out, you buy few strikes out of the money, and you can ride it for 6050, 6055 range. If it breaks, these are support levels, right? If it breaks 6008, the next support is 6000. Similarly, Tesla, if it breaks 347, it's heading to 362, right? There's no resistance between 347. There's no major resistance between 347 and 362, right? Similarly, if it breaks 334, then you can buy puts if you want to trade and ride it to 330. If it breaks 330, it will go to 324. So around 330, you can expect it to bounce, or it can just slice through lower on news or heavy volume, whatever it is, right? So that's how I use the levels, right? These levels are for that purpose, right? Apart from that, you have trades. Trades has its own levels. You can use these levels to actually, if you're in a trade, to actually take profits. It's very important to take profits. If you're 30% up in a premium, take profit. Then the next level, take profits another 30, 40%. And keep some and ride higher. That's pretty much how you do it. Okay.
Yeah, thank you.
All right. So it's 4:06. I think we'll stop